Hi, my name's David Linker from Davlin Finance Group, and I'm previewing for you in the next 2 minutes what our next webinar, Managing Holding Costs, will be about. In short, this will be one of the most important webinars for you to attend if you're an existing or a new property investor. Why? Because it's pretty simple, it's about cash flow. Can you afford this new investment property? So whether you're a new or existing investor, this will be very important. Now let's unpack this a little bit further. I want to introduce you to Fred and Lorraine, two of our mortgage brokers within our mortgages division. Lorraine, let's kick it off. Let's talk about cash flow. What are the most common mistakes you see people making with regard to holding costs?
Not understanding the cash flow, not knowing what their cash flow is like.
Okay. Fred, can you give us some shortcuts to how we might be able to understand what the cash flow shortfall is?
Well, we should know what our properties are worth, and our holding costs are basically 1% of that for body corporate and other things such as repairs and maintenance. And then you have your repayments for your bank and the rent that's coming in as your income, which will give you the difference, and that's your shortfall.
So in the webinar, we'll talk about the shortcut to working out the cash shortfall or the holding costs. Now, Lorraine, there's a big impact between before tax and after tax, and often that can be, if you don't understand that, it can actually give you the incorrect information to making a decision to purchase or not. Can you talk about that and the variation?
Well, the tax variation form gives you cash flow in your pay as you get paid, whether it's monthly or fortnightly. This helps you with holding costs, so it helps with the cash flow during the course of the month.
Okay. Now, if you're a property investor, you're probably also aware of lines of credit. Whether they're good or bad, they're an essential tool for you as a property investor. The challenge is to master them. Give us a couple of tips and how lines of credit may be able to help property investors.
Lines of credit will help you take out the bumps in the course of the month. So if income is not coming at the same time that commitments are going out, it will help with that. So the balance available will help you manage that. It's all about managing cash flow. You have to be quite diligent to ensure that you're using that purely for investment, otherwise it can get out of control.
Now, is there a way, because I know if you have one property, it might be easy, you get the rent coming in, the interest only payment going out, the rates coming out. But when you have 2, 3 or 4 properties, that's a lot of cash flows. Is there a danger of you becoming a professional accountant, spending all day Saturday and Sunday managing the cash flow? Or is there a simpler way?
The simplest way is to, all your rents go into one bucket, all your commitments come out of the same bucket, and you're topping up that line of credit with the difference.
Now, I hope that's going to be covered in the webinar.
Yes, it will be, David.
Great, okay. So when we talk about holding costs, it's pretty simple. Think of your own personal budget. Do you know how much income you get? Do you know how much you spend? Well, if you know that, it's the same principle applies to property investment. So we'll be going for 60 minutes with the webinar duration, and we'll actually discuss this at length and talk about some of the strategies that Lorraine and Fred have talked about. Any closing remarks with regard to holding costs, Fred and Lorraine?
No, just like your budget at home, you budget for your investment properties.
Fred?
Watch the webinar and you'll get the rest of the information. It'll make it easier for you.
We hope we can see you online. Thank you very much.